What is FBR Property Valuation Fees 2022? The modern revision has been introduced on 2nd of March 2022. For tax filer purchaser, 1% of the cost as per FBR prices is collected, and for non-tax filer purchaser, it is 2% of the FBR rates. For tax filer seller, 1% of the cost as per FBR prices is collected, and for non-tax filer seller, it is 2% of the FBR rates. What are the new charges for FBR 2022? The improved fees for tax 12 months 2022 are 55%, 49% and 35% if gross advances to credit score ratio used to be up to 40%, 40-50% or above 50% respectively. For tax 12 months 2023 and onwards, tax costs will be 55%, 49% and 39% if gross advances to savings ratio is up to 40%, 40-50% or above 50% respectively. Finance Act 2022 explanation of important amendments made. In the Income Tax Ordinance 2001, the Finance Act 2022 has introduced about positive amendments in the Income Tax Ordinance 2001. Some good-sized amendments are explained hereunder. 1. Incorporation of ordinances in Finance Act 2022. During the monetary year 2021-22, 2 ordinances have been issued. Some changes in the enactments via the ordinances have now been made part of Finance Act 2022. Income Tax Ordinance 2022. Certain provisions have been enacted via this ordinance on 2 March 2022. However, Part 59 degrees Celsius, 65H and 100 Fahrenheit have been omitted. Through Finance Act 2022. Tax Laws Ordinance 2021. The Tax Laws Ordinance 2021 ordinance was promulgated on 15 September 2021 and lapsed on 11 May 2022. During the forks of monetary 12 months 2021-22, certain amendments brought via this ordinance have been integrated in Finance Act 2022 after imperative modification. 2. Disclosure of beneficial ownership. Previously, agencies and AOPs have been now not required to reveal the natural individuals who are closing really useful owners. Thus, really helpful ownership could be hidden through intervening businesses and trusts. To bring transparency and to do away with this obscurity as per pleasant global practices, companies and AOPs are now required to reveal small print of their beneficial owners who are herbal persons. Definition of term beneficial owner has been supplied by inserting new clause in Area 2 of the Ordinance. Corresponding new Area 181E has been inserted in the Ordinance, whereby each corporation and association of people will furnish electronically particulars of its recommended proprietors and will be required to replace these particulars as and when there is alternate in particulars of recommended owners. Penalty of Rs. 1 million has additionally been prescribed by means of incorporating entry No. 30 in the table in subsection of Section 182 for every default of corporation or affiliation of humans who contravenes the provisions of Part 181E of the Ordinance. 3. Banking companies. Tax charges for banking agencies are superior as defined hereunder. The taxable profits bobbing up from extra earnings of banking companies earned from extra funding in federal government securities for tax of 2020 and 2021 was once taxable at the price of 37.5%. instead of prices supplied in Division 2 of Part I of First Schedule. This provision used to be in addition amended through Finance Act 2021, whereby earnings attributable to funding in the federal government securities of banking corporations was once made taxable on the groundwork of advances to credit score ratios at graduated tax costs of 40%, 37.5%, and 35% if ratio used to be up to 40%, 40-50%, and above 50% respectively. The Finance Act 2022 has delivered greater prices of tax on taxable earnings of banks attributable to funding in federal government securities. The greater costs for tax of 2022 are 55%, 49%, and 35% if gross advances to credit ratio used to be up to 40%, 40-50%, or above 50% respectively. For tax 12 months 2023 and onwards, tax fees will be 55%, 49%, and 39% if gross advances to credit ratio is up to 40%, 40-50%, or above 50% respectively. The adjustments have been integrated with the aid of substituting sub-rule of Rule 6 degrees Celsius of 7th Schedule to the Ordinance. Tax charge on earnings of banking groups has been more suitable to 39% for tax 12 months 2023 for modern 35% via change in Division 2 of Part I of First Schedule of the Ordinance. Additionally, the utility of Area 4B has been limited up to tax 12 months 2022. In case of banking companies. 4. Super tax on high-earning persons. A new Part 4 degrees Celsius has been delivered through Finance Act 2022 and this section will